Hey guys, new video for you guys regarding how I look for similarities within my setups. Now I think this is very crucial in terms of if you're looking for consistency within the markets, because this could be one thing that you're not doing that could impact your trading in a way that can make you really consistent. Because I've spoke to hundreds of traders, all right, because I've spoke to traders when I was in my previous course, and even out of that course I still kept on top of traders, all right, because I'm active on social media. A lot of traders reach out to me, sorry, and they jump in calls with me. I jump in Zoom calls and calls through my Discord group, and I speak to a lot of traders, and every time I look at their plan, every time I look at their journal and the trades they're taking, 90% of the people that are struggling, there's one thing that they're not doing. For example, that's something I'm doing where they're not becoming quite consistent as of yet, and that's not having these similarities within their setups they're taking. Yes, it's one thing having a trading plan, but also you need to understand, you need to look for similarities within your trading plan, within your setups, all right? Because a lot of people have trading plan for sake of having it. They'll have, for example, they'll make a couple of rules up. They'll say, you know what, this is my trading plan. And if you look at their journal, their setups don't even match up to what their plan is saying. And that is where loads of people go wrong. So when you've got a plan, please follow it strictly. Take it seriously, because that is what's going to put you, that's what's going to put odds in your favor. And if you're kind of deviating away from that and you're not following your plan and your setups, the only reason your setups may be not similar is by not following the plan. Because if you're following your plan, your setups should be very similar to whatever setups you've got in your plan. For example, you might have 3 setups, and every time you take setup number 2, for example, if you take it like 5 times, those 5 previous times you've took those setups number 2, they should be very similar. They won't be exactly the same, but they should be very similar. And if there isn't any similarities and they just look completely different, that's when people can take these losses after losses and they're never going anywhere and never find that consistency within the markets, because they're not even consistent with what they're taking themselves. All right, you need to understand, for you to be looking for consistency within the markets, first you need to be a consistent person, and you need to be doing things consistent within the markets itself as well. You need to be consistent at your forecasting, you need to be consistent at your analyzing, you need to be consistent in the way you're executing your trades, and you need to be consistent in the way your setups are, all right? So if you just take, for example, let's just say you've got one setup in your plan. Every time you take a setup, it should look very similar to your previous setup, because that's just how plan works. Your plan gives you a criteria to say when such and such happens, you execute the trade. And every time that's happening, and every time something is meeting your plan, there should be very, very close looking to the previous trade you took. There should be at least, I would say it should look at least 60 to 70% similar in terms of price action. All right, it might not be exactly the same, but it should look very similar. And if you don't have these similarities, that's when you go downhill. That's when these problems start arising from your trading, and you'll never become consistent. And I don't care whether you've been in the markets for 8 years, 9 years, 10 years, or you're just starting out. This is crucial. This needs to be done, all right? Which is, I'm going to explain you how I look for similarities, and I'll explain you through the trades that I've taken in the last couple of weeks to show you how similar my setups look. And it should make a lot of sense to you guys as well. Okay guys, get your pen and paper ready, and I'll take you through the charts and I'll explain to you what I'm talking about. So now that we're in the charts, I want to talk you through the 2 positions that I took, pound Aussie and then euro pound. Now, what I want you to pay attention to is when I go on the 1 hour, which is my entry time frame, I don't use any other time frames for my entry. I just use purely the 1 hour. I want you to look at the fact how I look for similarities within these setups, all right? And when I explain this, it'll make a lot more sense to you when I show you on the lower time frame on the 1 hour on the charts itself. Now, when I speak to traders, or when the traders come and reach out to me and they want help, when I look at their kind of journal, their journal isn't really very consistent. And if you're someone who's trying to breed consistency from the market, where you're trying to get consistent results from the markets, if what you're taking isn't even consistent, how can you ask for consistency within the markets? How can you even look for that? It's a bit delusional to me. So what I want you guys to do, before even I jump into this kind of 2 setups and show you the similarities, is look at your journal and ask yourself, do these setups actually look similar to each other? Am I actually sticking to my plan? Those 2 simple questions could actually change your trading by a lot, because that's what happened to me when I was looking for consistency a couple of years back. I looked at my journal and I just sat there and thought, do you know what? Yes, I'm taking setup number 2, but they don't even look similar. They don't even look similar. All right. Now, when you're trying to build consistency and you're taking trades that are not very similar, and you're taking setups that aren't similar and they're not consistent, then trying to get consistency doesn't work. Simple as that. So what I want you to do is make sure when you're taking these trades that are according to your trading plan, is to make sure that you strictly follow your trading plan and take the setups that are in your plan. And this way, you're always taking something that's consistent, and you're always taking opportunities that are, if not very close to each other, if you know what I mean. So if you've got 3 setups, and let's say on one week you've got 3 setups, and they're all setup number 3 that happen to kind of show themselves as opportunities that week, right? So when you take those 3 setups that week, what you should have in your journals, yes, there's going to be a little bit of differences within the higher time frames, within the lower time frames, but overall, because it's the same setup, you should have the price action itself should look very similar. You should see some sort of consistency within those setups. And if you don't, that's when most likely you're maybe going wrong. And I'll explain that to you, and how I kind of keep this very simple when I look at my entries, all right? Now, let's dive straight into this kind of chart work, and I'll explain to you. I'm going to start by going through the daily and then lower time frames. Now, the daily might look slightly different. That's absolutely fine. All we're looking for within the daily is a directional indication. Have we got some sort of bias that we can go off in terms of long or short, for the week ahead, or that following day, following weeks, months? So what I'll do is I'll go through my daily time frame. I use my daily to kind of give me that directional indication, or then sometimes I do use weekly as well. And then my entry time frame is just the 1 hour. If you've got a little bit of noise at the background, do forgive me. There's an air show that's happening here, and it's the typhoon that's kind of hovering around and doing its kind of show. So you might hear this loud noise in the background as well. That's absolutely fine. Let's go. So let's go through Euro Pound first, and then let's go through Pound Aussie in terms of high time frame, and then we'll jump into lower time frame. So Euro Pound, nice and simple. If we look at Euro Pound, we've tapped into this little volume point, and to me, volume point is just an area where prices either completely dropped off from the left, or we've seen some sort of heavy momentum to the upside. So either or, it doesn't matter. As long as we see solid momentum going off it, that to me is you can either call it double tops or whatever you want to call it. I just call it volume point, and that's the way I know, because I just know if something, for example, from here, right? From here, we see price completely pushing to the downside. To me, that acts as like there's some sort of volume situated there for that to be completely pushed down like that. So to me, that it becomes a volume point. So we've got a volume point here on Euro Pound. We've tapped into this area, we broke above, my psychology, catching traders on the wrong side, pushed down, and then we saw this clear movement back up, but we didn't quite make a double top. And I've seen this more often than not, and you'll see it on the lower time frames when I look at these entries as well. We try to make the double top, but then we continue to push back to the downside. This happens more often than not. And because I've told you this now, you'll actually keep an eye out for it, and you'll see it for yourself and how often this happens. And we see this price move down. So to me, what I saw next was, as we had this price move down, we're going to look to correct, and then we're going to look to continue. That's most likely what I thought market might be doing, and that's most of the time that's how market works. All right, we move by the 1, 2, 3 cycle. So we see the impulse, we see the correction, and then we see some sort of continuation with the move. All right, now it doesn't happen all the time, but it's enough for me to go, even if for example, even if we have this move here, continuation, right? Even if it only comes down to here, space from here to here, that's enough for you to make a really good return. All right, that's all you need to. You don't need the market to go completely down. All right, it gives you some sort of directional indication to say, you know what, we're going short. And to me, that's what it was. I saw this, and then I saw price coming back up to this double top around here. So as we saw price coming back up to this area here, I said, you know what, I'm looking at shorts now. We've got this high test candle as well on this area. I'm more than happy looking at shorts on that area to go lower. And same with Pound Aussie. Look, this is the daily time frame. We've tapped into this volume point. We had the massive high test candle, the bullish one, and then we've got the bearish high test candle. To me, there's nothing else at that, right? We're at a volume point. We know price dropped heavily from that level previously. We've got 2 high tests. That's enough for me to go. It's giving me an indication to go short, and that's all I was waiting. That's what I was waiting for on the lower time frames. I was just waiting for my entry to come and then jump and go short. All right, simple as that. Now let's go on to the lower time frames on both of these, and I'll show you how I look for similarities. All right, this is very important, so keep a close eye out for this. Now, if I just show you because it doesn't let me kind of use the replay tools on both of these when I've got two kind of charts, I'll just keep a replay tool on the euro pound position and just see this as it's obviously played out. So what I want you to keep an eye out for is until this point on pound Aussie. All right, now look at the similarities. I don't need to go back quickly and show you where this kind of line is coming from. This is just a volume point to me. All right, as we can see, price pushed to the downside heavily from here, and we've pretty much formed the double top. We've tapped into the volume point and we've dropped lower. All right, we've had this continuation to the downside from that area. We pulled up, and like I said on the higher time frames, how often do we see this? Price wants to make the double top, just a near miss, and then it continues to the downside. Simple. There's no overcomplicating that. All right, now look, we've obviously tapped into this volume point. Price tries to come back, pushes down, tries to come back to make a double top. It doesn't, and then continues to the downside. Again, look at the similarities between these two moves here. Remember, these two trades that I took are exact same setups. For example, if I've got 3 setups in my plan, they're setup number 1. All right, so they're both exact same setups that I'm looking to take within my plan. So look at the similarities. We've got this similarity where price comes to make double top, near misses, and then we get a continuation. What's the next one? Look, price pushes up, we get this little pullback, and then it taps into the area. Look at this little pullback. Yes, it's a slightly deeper version of that, but we've got this, and then price pushes up. So we've got similarity number 2. All right, nice and simple. So we've got similarity number 1 here. So this area here, this is your similarity number 1. This is also similarity number 1. We've got this little move here, which is similarity number 2. This little move here, similarity number 2. And then look, we break past this previous low and we're retesting. We break past this previous low and we're retesting. This to me is similarity number 3. All right. And there's a few other criteria that need to be met for me to execute this trade. I don't just execute because of this. This is just bare bones of what I'm showing you in terms of my strategy. But this is what I typically look for. And then obviously, like I mentioned, there is few more criteria that need to be met for me to execute the trade. There was enough criteria for me in both of these scenarios for me to execute the trade. And look how similar these price actions look. If you don't have this sort of consistency within your setups or the entries that you're taking, I'm afraid to tell you, you just won't find that consistency you're looking for, right? And I just want to be honest, because there's no point me lying to you and not being honest to you, because I feel like I just want to create a channel that is honest, or that is telling you what you need to hear and not what you want to hear. Because I can sit here and say, do you know what? Just do this, just do that. You don't need to find consistency. You don't need to have the setups that look similar to each other. As much as I want to say that, that just won't do you justice. It's just, if you're trying to become a consistent, profitable trader, you need that, all right? You need this consistency within your setups. It is absolutely crucial. And it's, for me, like I said, this is my setup number 1. And as you can see, when I've taken my setup number 2 times in the last potentially 2 to 3 weeks, I've taken these 2 times. The pound Aussie, as you can see, I banked 2% on, and it was slight mismanagement because I could actually walked away with around 5.6% on it. But I was just still being slightly more riskier because it was a Friday, and as I entered the market, I got tagged in and price pretty much tanked. All right, it got to about 3%. And at one point, I was just thinking of, I think I had my stop at 18 pips. Let me adjust that, because I was at one point I was floating around 4.3 or 4 point something percent, and I just wanted to close it. Yeah, something like that. So I just wanted to close it at this point because I thought, you know what, it's Friday and I was going away camping that weekend, and I thought, you know what, it'll just be nice to just close the trade at 4.3% and just walk away and just enjoy the trip. But you know what, I thought sometimes I need to kind of listen to my instinctive thoughts, and I thought, because it's already running at 4%, I'll lock 2% in. So even if I do walk away, it's going to be at least 2%, and it's still a positive end to the week because I didn't take any trades that week. And if it does tag me out, it tags me out. I accepted that fact. But if it doesn't, because there was solid, heavy momentum coming down, I thought it's coming to end of the week. If it just wants to, for example, it might drop, and it was around 4 o'clock, and I thought it might just hover around here for a couple of hours, and then the market will close, open up, and then we'll see this continuation on the Sunday night or Monday morning. But what happened was it kind of dropped down and then it pulled back heavily and tagged me out for 2%. So when I do see these large movements, I typically allow it a little bit of leniency, all right? So I do typically just allow a little bit more movement for kind of a little bit area and room for breathing, all right, for the market. But in this aspect, I became a little bit more aggressive and it tagged me out for 2%. Again, I'm still completely happy with that. But it's just the fact that normally I do just leave this at break even and I allow a little bit of hours to settle, for the market to settle after it's had such a heavy momentum, and then I'd lock the percentage in. But in this aspect, it just happens to be that I kind of locked 2% in and it tagged me out. But otherwise, I would have probably got out around this area here for 6%. It would have been a perfect trade. And this one though, if you look, I set the entry after this high test candle and I was pretty much, it doesn't look like it, you wouldn't maybe think that I got tapped in there, but I got tapped in and tapped out. It is what it is now. They're exact same setups. And if I now sit here, like a lot of people do this, right? That's a very important lesson. Now, when you take this trade, a lot of traders will go, do you know what? Perfect. It's one of my setups. It's my go-to setups. I'm so happy. I'm going to be consistent. I'm going to be profitable. Look at me. And then you show off to your friends, your family, and then you take that trade, for example, it takes a loss and you're like, is there something that I need to change? So did I miss something? Was I too aggressive? And you get those thoughts. That's exactly what I want you to step away from, all right? I want you to look at consistencies within your setups. Now, this ticked everything like this one did, all right? It's the exact same setup, it's the exact same entry, and there's nothing different to it, right? All right? Yes, there's slight bit of differences within the price action itself, but that's understandable. Nothing is exact same as kind of previous moment within trading itself, because everything is uncertain. It's a random and it's a random marketplace. All right, there's random people putting in random trades, and there's not one trader the same thought process to the other trader. So we're all thinking differently. We're all looking at market in different ways. I could have went short here. Someone maybe is going long. That's different. But what I want you to look at this and is take away from this is the fact that look how similar my entries are, and look how simple trading can become when you look at these entries. And there's nothing like, to me, when I took that entry, I didn't sit there and dwell on the fact that I took a loss very quickly. This was within 15 minutes of setting the entry, I was in out, all right? So I didn't sit there and question my strategy. I didn't sit there and question my trading plan. It was the setup that met the plan. I executed. I know for a fact if I take that more often than not, I win. And I can show you more scenarios, more examples how these sort of setups play out more often than not. And you just sit there and won't even question yourself if you trust that and if you see that more often than not. I just think with a lot of traders that are kind of starting out on their journey, they don't understand this, how looking for consistency within the market actually starts from looking for consistency within their setups. If they don't do that and they don't think about it that way, what they'll do is they'll potentially maybe take one setup and they'll go, do you know what, this works, they'll take a winning trade, and then they'll take the exact same setup, looks very similar, that meets the plan, it ticks all the boxes, but it'll just be a loss. And they'll question their plan, they'll question their strategy, they'll question their setup, and they'll start changing things just because they took a loss. This is where I want you to step away and let the numbers play out. I don't question my setups, never mind the full plan. I don't question my setups because I've got like 3 setups that are pinpoint, and then I've got 2 other setups that fall in between those 3 setups. So what I do is, out of those 5 setups, for example, I've got 2 here that are my setup number 1. I'll wait for another 18 because I typically look at 20 trades on that each individual setup, and I'll do an overall evaluation of, right, I took 20 trades on setup number 1. 15 of them were winners, 5 of them are losers, or 10 of them were winners, 5 of them are losers, and 5 of them were break even. And overall, has it got me consistent results? Am I still a profitable trader just on that one setup? And if you are, then you don't really need to change anything, because you're still with that, even just with that one setup, you're still bringing in consistency from the market. You're still bringing in profitable returns from the market. Yes, for example, you only took 10 winning trades and 5 of them were losses and 5 of them were winners, but remember, losses are capped. So you took 10 trades, even if the 10 trades you only banked 1%, you banked 10% on the 10 trades that you won. And then the 5 trades you lost, you only lost 5%. You're still net profit 5%. So this is crucial, like I mention all the time. Risk management is very key. And this is the way everybody should evaluate their trading plan. It shouldn't be just because you take a loss, you need to question your plan. Like I mentioned, build a plan, because I made that video previously, have a solid rule-based plan, and once you've back tested it and you understand it works, put it into the live markets. Because remember, just because you back tested and you're testing in the live markets doesn't mean you're completely clued up with the strategy. You can still have flaws. This is what all the right experience comes in. It's applying in the live markets, it's learning the emotions, it's controlling the emotions to a point where they are manageable, because you can't completely control them, but you can manage them. And it's all learning these little things as you go along. And trading plan doesn't just happen overnight, it doesn't happen over a month, all right? For you to build a plan, have a solid structure, rule-based plan, for you to test that out, put it into the live markets, and then get all the informations, learn about little intricacies within the plan itself, until you build that correct experience. It could potentially take 6 months to a year for you to completely understand your own plan. And within that time, think about a normal trader. How often does he take a losing trade because he's so early on? Very often, all right? And how often do you think he will sit there, or she will sit there, question a plan, question a strategy, maybe change something? It's the shiny ball syndrome. Just because it doesn't work once or twice, they start changing things. And to me, it's like a leaking cup, right? I'm going to give you an example. When you're trying to change strategies, right? For example, let's say you've got a cup, it's filled with water, but there's a hole at the bottom, right? The time you become perfect at trading is by allowing that water to completely flow out of this cup, right? The hole is eventually going to let the water flow out of the cup, and it's going to be an empty cup. And that's when you're going to be really consistent at trading, all right? Because all the flaws and the kinks are within that water, let's say. And as it flows out and you get this empty cup, that's when you become a consistently profitable trader that knows what they're talking about. Trading is second nature to you. But most of these traders, they're changing and chopping every time they take a couple of losses, all right? Because they don't trust their strategy. And every time you're doing that, you're adding more water in this cup. And you'll never get to the point where you're consistent, because you're just chopping and changing every time. So for you to have that clear cup, you need to actually understand, have this one strategy, stick to it, back test it, forward test it in the live markets, and just bear with it. Because it takes 6 months to a year at least for you to understand the strategy completely. Because that's what it did to me. It actually took me about 2 years for me to completely have this sorted out and have this built in a way that I know is consistent and it's know is profitable. I know his kinks, I know his weaknesses, I know the strengths of my strategy, and it does take a lot of time. And I don't think there's many traders out there that are patient enough to go through that, because really we're just impatient people. Well, probably 99% of the people in this world are impatient. It's just how we are as human nature. Everything needs to be here now in this kind of Amazon Prime mindset, because it needs to be here and now. Otherwise, you're just not interested. You want to go and find something that makes you money quicker. All right. So guys, hopefully this has made sense, and just become patient with your trading plan. And like I mentioned, every time once you've got your trading plan, have 20 setups on each setup, not just your plan, all right? Because although for example, although you took 20 trades, they could be like 3 on setup number 1, they could be like 15 on setup number 2, and then like another 2 on setup number 3. What I want you to do is grab at least 20 trades on each setup, all right? How many setups you've got in your plan? Once you do have, it doesn't mean you need to wait for all of them to be hit. Once, for example, one of your setup hits 20 trades, I want you to evaluate that, right? Take those 20 trades and say, right, how many of them were losers? How many of them were winners? How many of them were break-evens? Is there some, do my entries look very similar enough? Have I become consistent with it? Am I bringing in results? Is my overall net profit positive? All right. And if it isn't, maybe then we need to start looking at changing things. Maybe something that the setup might need tweaked. All right. Maybe something that needs to be removed. Maybe something that needs to be added to make sure the setup is more robust and it brings you and it yields you consistent results. But that's a topic for a different day. But that's how I want you guys to look for entries when you do jump into the markets. All right. Look for these consistencies within your setups. If you do, I can guarantee your trading will start to change. And when you see it this way, when you start thinking it this way, because this all makes sense to me, it might not to you when you watch it first time. Watch it a couple of times and it'll make sense to you as you watch it, all right? Because the more you watch the same video, every time you watch it, for example, let's say you watch it 3 times. The 3 times you watch it, you might learn 3 different things on every time you watch, all right? So look for consistency within your setup, specifically your entry time frame, all right? I'm not so worried about your higher time frame, because your higher time frame is just a tool for me to get my directional bias. But your lower time frame, what I want you guys to do is to look for solid kind of consistencies within your entries and your setups. And once you've nailed that in, I can guarantee you'll start seeing major differences within your trading results. And guys, hopefully you've enjoyed this. Like I mentioned, you can join my Discord because I explain these lot of the times. I explain all like these kind of contents more often than I do on YouTube, and it's for absolutely free. There's no subscription, there's nothing like that. And I do that I show my trade recaps, my breakdowns, informations like this, the little 1% tweaks, and then I also jump in calls with traders. This is for absolutely free. You can jump in call with me for absolutely free. And I do this as a way to just help out people that are stuck, because I remember I never had this when I started, and I just wish I could always find someone who wanted to help like I did, and I never found that. And if I've went through something that was very hard to me, I wouldn't kind of want anybody else to go through that either. So because I'm in a position where I can give back and I can help traders out, I'm more than happy to do so. Just remember that more people join as we obviously increase our channel and increase our kind of popularity. There's going to be more people in my channel. I can't just jump in with everybody, and I might become limited at that point. But for now, I'm very early on in terms of becoming social and becoming active within you guys. So take full advantage of me while I'm here. Jump in calls with me, join my Discord, send me a wee DM. I'm more than happy to jump in call, and I'll talk you through your strategy, and I'll talk you through your plan, maybe what's wrong with you. Maybe I can't help you out in terms of your technical strategy, because your strategy might be different to the way I trade. But what I can help you out is in your psychology. If, for example, like this, you may not have consistencies within your setups, I can figure that out. And I can guarantee you, 95% of you guys jump in calls with me, I can find an answer for you first 5 minutes of the call, because I just know. I've been in the market for 8 years. I understand where people could be going wrong. And as simple as that. So guys, I'll leave the link in the description below for you to join my Discord. You can also check out my Instagram, and I do post there quite a lot as well. And guys, hopefully you have a successful week ahead, and you've had a good successful week this week. Trade safe, and we'll see you in the next video.